Hello guys, welcome to another episode of Chart Mojo. In this video, we will continue our work on the analysis of trend. In the last video, we have done 4 features which was subjective in nature that help us to identify whether it's a downtrend or an uptrend. In the last video, I have specifically covered those 4 features on the downtrend. In this video, we will use an indicator which is moving average to identify the trend. So guys, why moving average? So basically, moving average help us to smoothen the data, okay? Whenever we say 200-day moving average, okay? Or let me give you a simple example. If we say a 5-day moving average, what we do? We add the 5 days price, divide by 5, okay? And we draw a line. It will continue to go up if the price is moving very fast, okay? Now, here we are looking at 200-day moving average, okay? Now, in this example of Aurobindo Pharma, you can see a blue line, okay? Now, this is 200 period moving average. Now, if I apply it on 5-minute chart, it will become 200 5-minute moving average, okay? Now, I have applied it on a daily chart. That's why it will become 200-day moving average. We call it 200 DMA in a short form. Okay. Right now, you can see Aurobindo chart. Here you can see from 2014 onwards, we have seen a good volume spike. And from here, there was a initiation of an uptrend. This trend lasted for almost 2 years. In 2016, this trend finally got exhausted and it breached 200 DMA. Okay. So, whenever we say a price is constantly above 200 DMA, we call it as an uptrend. Okay. Now, 200 DMA is widely used in the market, not only by technicians, okay, like us, but also by the big player. If you see big institutional fund, okay, as well as long only buyers, sovereign fund, you name DII, FI, all of those, they too look at this indicator. They might not be interested in other technical studies, but this is a common indicator which is used by all the big firm as well. Now, why 200 DMA? Okay, before going ahead, 200 DMA simply means 200-day data. Okay, now it represents approximately a year. There are 20 sessions in a week, in a month. You can simply multiply, near about 230 to 40 sessions we will get. So approximately 200 day is taken a equivalent of year. So whenever you see a counter is up or is constantly down of that 200 DMA, it shows the interest of bigger parties. Now, why I'm saying bigger parties? Because big player in the market are not here to trade for a single day or to trade for 5 to 10 days. Their volume are so huge. If they want to trade for such a short duration, they will end up paying or they will end up emptying their account just in the form of slippage, okay, or the charges. Basically, they are the one who moves the market, okay. So, whenever we talk about a counter is constantly up above 200 DMA or it is constantly down below 200 DMA, it means the bigger player interest is upward if it's the first case, and in the second case it's downward. Now, continue to our example. Here we can see there was a breach of 200 DMA. It clearly shows that there might be change in some fundamental. Okay, now I am specifically using word fundamental. So when you do study on various stocks by using 200 DMA, you will find whenever the counter fundamentals were impact, 200 DMA was very hard to be breached. It will only breach in case of panic. Okay, now interestingly, we will I will apply 200 DMA on Nifty as well in the end of the video, and you will find a very good result if you apply 200 DMA, and we will see how news impacted the price movement near 200 DMA. Right now, whenever we see a breach in 200 DMA, we can clearly see a fall in the price, further acceleration in the fall in price. Okay, and this is because the major player, okay, the institutional player or the bigger parties who are pricing that counter 1 to 2 year ahead of earning, they know that the engine or the growth drivers which were running that stock up is now not working or getting weak, basically. Okay, so you can see in 2016 when its fundamental got little bit shaken up, you will see this kind of behavior in the stock. Now in 2014-16, you can see any pharma counter, you will definitely see a very good rally because of their fundamental change in fundamental due to the policies in USA. Okay, and they were, all of the company basically were making generic medicines. So you can do a research on that as well for further purpose if you are an investor. Now let us see some recent data. Okay, now this was a very good uptrend which came to an halt, okay, when this was taken out. Okay, before going ahead, you might have question, sir, once the 200 DMA is taken down, okay, if it is broken here, can we re-enter when the counter go again above 200 DMA? So answer is no. You should not directly jump in the ship. You should wait for a series of higher high, higher low, okay, to rationally act on that. Okay, this is the first point. Second point, if you find some pattern which is getting taken out, let's say a ascending triangle, and here was a 200 DMA, or you can say here was a 200 DMA, and this pattern formed just above 200 DMA. That time you can enter, okay, or you can wait for some reversal chart pattern near 200 DMA area, okay, to act upon it. Let us see this recent behavior of Oro. Here it is, and we can see there was a massive breakdown when 200 DMA was taken out. Okay, not in this case, we can also see some previous bear run in the counter as well. Now, sir, there is an breach of 200 DMA here, but again the counter went up. Okay, so see, first of all, you need to check 200 DMA. And then second thing, you need to check if there is any pattern formation or not. Okay, if I will touch counter A, okay, A point and B point, okay, and simply drag this line, okay, or make a new line. Let me, do it with the trading view indicator. Okay, let me put this line A to B here. Okay, we will choose this point, okay, because this is the point which was first made, and we will clone this point. Okay, what we will find is there is a pattern forming up. It's in a channel pattern. Okay, now in this case we can clearly see that the price went down. Okay, it took support on this trend line, which is nothing but a rising channel support line, and it again went up. So if this is the case, why should we worry when this line is taken out? So guys, most of the time you will see a fake reaction like this as well. Okay, but you should only act on this reaction when you see again the same theory, a lower low, lower high being formed. Okay, otherwise you will encounter n number of signal which breaches 200 DMA and breaches 200 DMA up or down. Okay, so wait for the close and wait for one lower low, lower high to be formed. Now in this case there was a channel pattern, and with the volume you can see that there was a good breach in this. Mostly if it's a false breakout, you will see the lower volume as well. You can remember this 2 to 3 point which I have just discussed. to avoid false signal from 200 DMA. Now, this counter, when it is going down, okay, you can clearly see following lower low, lower high, which we have done in the previous video. Also, now this 200 DMA will act as a resistance again, and here it act as a resistance. So clearly we can see, okay, how 200 DMA help us by a single indicator. It gives a clear visual that bears are quite in a powerful position in this counter. Let us look on some other stock, and it was NBCC. Here it is. Now see, this is the NBCC chart. Let me clear a previous video drawings. Here it is. You can see when it was in uptrend, okay, you can see it was about 200 DMA. This was acting as a support. Now here there was a breach of 200 DMA, but see, there was no lower low, lower high formation. Okay, there was no lower low, lower high formation. Again, a sideways support, taking a simple support, okay, on the 200 DMA. Finally, it is broken down. Now you can see there was an attempt to go back up, but this attempt failed. So that's why this is high, this is low, this is your higher high, sorry, lower high, and this is your lower low. Okay, so this breakdown is the breakdown where most of the technical trader will be interested to bet for a big quantity short. Okay, why? Because it gives an indication to them that the bigger party, the bigger institutions basically are now not interested in this counter. That's why this counter is now trading below 200 DMA. Here you can see it is given, here you can see it is simply trying to go up, okay, but as I said, higher high, higher low formation for an uptrend, okay, like this. One sequence you will need at least, or you can see this is a 200 DMA. There is a breach of 200 DMA. There is a pullback. There is a throwback, and again there is a breakout. At that time, you will look for a long position. Okay. Finally, after the COVID pandemic fall, it started a rally here, and it went into a high high, high low formation and gave a rally there. So guys, it is a very simple way to identify a downtrend or a uptrend. Now, why this is objective basically? So simple, because I am also seeing the same moving average, okay, same line, and you are also seeing the same line, which means all those market participants who are involved in trading, investing, they will look the same data as contra to our 4 features that we study of a uptrend or a downtrend, okay, where we manually see, okay, the support zone is this, higher high, higher low. Some will mark different higher higher low. Some will consider volume study differently, okay. But this moving average is common for all, okay. Now let us go to another stock, which is Netflix. You can now clearly see how institutions are basically running from this counter. We can see a volume rise here. Also in every gap down. And here was the fall. Okay. Most of the people would argue that, sir, what if the counter breaches 200 DMA and takes support at this line? Yes, it's a possibility. Okay, this is not an guarantee thing. Okay, trading works on probability. That's why you can see a bigger gap down happening. Now this was a result gap down, but it happened. Okay, and after that, every trader know that this counter is into a very into a very bad condition, or into a trouble, in a deep trouble. Okay, here if someone is very aggressive, okay, they can know the intensity of a fall. If you are in market for a long period of time, you know this intensity of a fall. It was not like this kind of a fall. You can see prior when it did breach 200 DMA, how it breached. Okay, when they say intensity of a fall combined with an event which was the result, some of the speculator can speculate that bigger parties who are aware of this or some insiders are creating short or emptying their position. Okay, now right now there is a breach of 200 DMA. Okay, there is a throwback. Okay, it is trying to take a support and it did give a break from this level. Okay, but there is another study which we do which is called a gap analysis. Okay, and until this gap is filled, in this you need to combine two study, by the way, and this is not any recommendation, this is just my thought. If someone wants to go on long on Netflix, they need to wait for 335 level to be taken out on the closing basis. Then you can see a again rally in this counter. Okay, so by just applying a 200 DMA, we can save ourselves, okay, from getting burned or buying the dips. Why? Because as retail, again, we are very much interested in buying the dips. Or if the counter was trading at $700-600 counter, now it's at $300, it's a 50% discount. Okay, so avoid doing this and wait until it go up above 200 DMA for averaging at least. Okay, now the last counter which we will see, and after that I will definitely show you some interesting fact on Nifty as well. See, this is the HEG chart, a one way very smooth rally. There was a breach in 200 DMA. Okay, but again it went up. Okay, now you will say, sir, what if I would have exited here and it would have gone up? That's still okay, because in trading it is better to be safe rather than holding and losing counter. Okay, when it did finally breached with good volume, you can see the volume was very good, and then we can see a massive fall in the counter. It almost given a very terrible fall. About 90% of the capital is gone in this. Okay, so those who are aware of this fact, they know, okay, if they are not exiting here, they will definitely exit here. Why? Because it will clearly show there is some change in fundamental, especially counter like HEG, which are cyclical in nature. This all the metal counter which are cyclical in nature, 200 DMA is even more watched carefully. Okay, similarly, by the way, you can see our 2021 metal rally came to an end. You can see here as well 200 DMA got breached with this support. Okay, now it is a very good indication that you must be out of this stock, or you should not average now. At least if you are stuck in this stock, you need to wait for another 3-4 year or next metal cycle to come for this counter to again go up. Let us see some interesting fact in Nifty near 200 DMA. Okay, now when I have done research on Nifty, I have seen in many cases when Nifty breached 200 DMA in an uptrend, it was due to some event or news. Okay, so let us see this. Okay, now this fall was due to the Russia and Ukraine war news, when the 200 DMA was taken out. Okay, after that, this is due to the interest rate. Okay, basically Fed which were pulling up, but this is we can consider a genuine fall from the 200 DMA. Okay, this was a not very much news driven. This is a macro thing which we consider at like a non-event fall. But let us go behind. We can see this part. Okay, this part is nothing but again pandemic fall. Now here you can see the price was going down. This is the Nirmala candle, which in market all know, which all are scared of. So basically, again, there was some policy which were not in favor of FIIs. They were selling from here, and market went down at that time. If you see this consolidation here, it was just before the election, and from 2017 to 18, let me just clear this and scroll the chart. Yes, and especially this period 2018 to 20 period, lot of macro event happening in India, GST, demonetization. Okay, we will see all those impact here. Okay, now here was the election period, a bit, market are in favor of current government. So if there are any chance of same government being not elected, that's why the market will become little bit shaky. Again, if you will see in 2000, if you will see this fall, by the way, this was during ILNFS crisis, okay, where all the NBFC were beaten down. Let us go back, okay. Now this fall, if I remember, this was due to the correction in Dow. We were having a very good market, very good bull market from 2017 to 2018. Here we see a fall with the correlation with Dow. Okay, if you see the Dow as well, you will see this kind of behavior. Now this 2000, just before this rally, this was, I think so, yeah, due to, if I am not wrong, this is due to the election period in America. Okay, this was the demonetization. Here the Trump got elected. Again a macro news, again a news based fall. When it formed a double bottom, it breached 200 DMA, then we can see a good upside move. Let us go back. This is a genuine down move. Now see, all this down, all this signal where Nifty is going below 200 DMA can be identified with some news. Now here this was a genuine downtrend, okay, which is due to the macros. Okay, whenever the economy goes into the recession, you will find count indices making lower high below 200 DMA, which helps us to clearly say, okay, this is a bear run. Again, if I will see here, see this 2011 to 2012, again this is a bear run. Okay, now if I go back, see this again, this is a bear run. Okay, so it is very interesting to see indices like Nifty, it might touch 200 DMA, okay, due to some news or due to some temporary shocks in the economy. But if it's for a longer duration, then we will definitely go into the bear market. Otherwise, we will see this kind of behavior, and we can combine this behavior, this temporary shock below 200 DMA, and use pattern if there are any pattern forming up, and take a trade there with limited risk. Okay, so guys, I hope you will find this video worthwhile. If you like our video, do give us comment, and don't forget to share this video with your friend who are into trading, and definitely subscribe our channel. Bye guys, I will meet you in the next episode.